all excited to know more about stock market. For today's video we were going to tackle about a book review about stock market. This book review is all about You Can Be a Stock Market Genius by Joel Greenblatt. These are the key takeaways from this book. A comprehensive and practical guide to the stock market from a successful fund manager, filled with case studies, important background information, and all the tools you'll need to become a stock market genius. In contrast to many other ventures, you can choose your battles and even your playing fields when it comes to investments. No one will punish you for not doing something, only for doing stupid things. Therefore you can specialize in a specific type of investing. You can always keep money in cash if there are no immediate opportunities in the chosen area. So how do you find corners of the market where the competition is lower? The underlying theme in Greenblatt's hunt is changing in the form of spin-offs, mergers, restructurings, rights offerings, liquidations, asset sales, distributions, etc. Essentially, it all boils down to a simple two-step process. First, identify where you think the treasure lies. Secondly, after you've identified the spot, preferably marked by a big red X, then, and only then, start digging. No sense, and no fun, digging up the whole neighborhood. Spin-offs, for example, have had a massive outperformance over the 3 years that follows the separation. The spun-off company's shares are often sold regardless of their merits, either as the original investor was interested in the mother company in the first place or because the new company is too small. Combined with the fact that the management gets a real boost from being liberated from the old corporate overhead, this opens up for outsized returns. However, the investor should wait for the selling to ebb out before making his purchases. Which spin-offs offer the best value? Greenblatt advises letting insider buying judge which derivatives to invest in it. There will, in general, be a minimal possible downside to a stock coming out of bankruptcy. After a default, the old equity holders will be gone, and the senior debt will have been turned into a combination of new debt and new equity. Hence the equity holders are the old bondholders. As they, in most cases, are fixed income investors, the shares will be sold regardless of their merits, making them cheap. Corporate information from the bankruptcy proceedings is available. Most investors will be traumatized from previous ownership, and the sell side doesn't want to touch the stock. The author further advises seeking good businesses that can deleverage. He argues for deep research and focusing on the best ideas instead of broad diversification. Over time the portfolio will have many positions, and it will have diversified over time instead of at any given time. It's better to do a lot of work on one idea than to do some work on a lot of ideas. Success is probably 2 parts being at the right place at the right time and only 1 part perseverance, skill and intelligence. That's all. Thank you for watching. Kindly follow our page for more info about stock market.